My name's Anthony Fatsis, and welcome to the What the Finance podcast, where we interview finance, trading, and investing experts to help you understand current market trends and learn about the intricacies of new and existing assets. If you enjoy the podcast and to help with the YouTube algorithm, please like, comment, and subscribe. It really helps with the podcast. That means we can continue to get amazing guests. Thanks again. I hope you enjoy. I had a few questions really talking about like if you read recent articles about food inflation and I think you mentioned as well how you think like the world's changing.
Yeah, look, so um, the original food inflation idea just came from looking at what was happening in China. And they have this thing called African swine flu, which has actually been around for over 100 years. It's sort of, yeah, as the name implies, it's originally from Africa, but it's been endemic in Europe for over 100 years and yet to develop a vaccine for it. You have to you have to cull the entire pig population.
Mm.
Now in Europe, what's happened in Europe to deal with it is they just improved the sort of food hygiene process. So when they get an outbreak, they sort of just quarantine areas. It's never been in Asia before. So I think when it first broke out in China, it caused huge disruption, and you had this huge spike in pork prices, which is interestingly come back down again. So I was of the view that I was like more cautious on food inflation, and then we've had the war in Ukraine, which has caused it to go up again. But when I was looking at food inflation, I was particularly looking at China, it was interesting to see that it was moving from being like self-sufficient to being reliant on imports. And I think what we've realized now is like there's that sort of creates these two different things. Perhaps impetus for political change, or political change both positive and negative. Uh, does it create changes in financial conditions? It's intriguing. I don't know if anyone knows the answer. But it's something worth, I think, thinking about. And like I think I've said to people historically, food inflation has been typically bad for markets. Whether that's going to be the case this year, I don't know. Markets have sold off a lot, which is what you expect with a war, and then have bounced back. And I think I've got reasons for that, but I'm still thinking about it.
Yeah. So why has China become sort of, reliant on imports for food? Because it's not something you think. You think it's a massive country. It should be able to sustain itself. But
Absolutely. So I think, if we look at sort of some other, if we look at like Japan or South Korea, which, have sort of similar social makeup, similar sort of demographics and similar geography a bit. Japan's a bit special, but what you find is, I don't know if you've been around in East Asia much, but what you find is that unlike like in Australia or the UK or the US, there's not a defined rural or agricultural area and industrial area. It's almost like they mix together. And are right next door to each other. I think that's part to do with the sort of labor intensity of rice farming. So you need a population nearby. You can't have one farm being farmed by one person like you can in other places, in the West in particular. So you end up with quite a competition for land between industry, residential, and farming needs. And so as you get more, as the population gets richer, you find that the amount of land that can be used and dedicated to farming actually drops. And China's big problem has been that they've been very aggressive in farming the land, I think, to stop them becoming food importers. And they've actually sort of over fertilized it. So there's a report, which is hard to come by these days, but there is a report from about 8 years ago that estimated that 10% of Chinese farmland was actually contaminated from industrial waste. And it actually, if you're from Australia, you're probably aware of this, but the Chinese love buying milk, baby milk powder.
yeah.
Yeah, because they don't trust the milk supply or the food supply in China, which makes total sense. But if that's, so you put those two things together and you go, okay, well, it's actually very difficult to uncontaminate farmland. It takes a long time. And so you can easily see how the combinations of a booming property market, booming industrial production, and growing wealth and people wanting to eat better food, which is a very natural thing, is leading China down to becoming more reliant on foreign food. And this is
Yeah.
where it gets interesting, is that uh, theoretically, the whole idea behind free trade is if you're reliant on your trade partners, then you'll have good relations with them because you don't want to disrupt that. But there is a more darker past, which is like, so Hitler invaded Russia to get access to the Ukraine for food supply. And so you can get this sort of dark parallel with what's happening today. And unfortunately, it's not actually, I wonder if China sort of has played along with Russian aggression because they would like to get guaranteed access to Ukraine grain and vegetable oil. Who knows? I mean, that's just, I don't like talking about that sort of stuff because it goes that sort of crazy conspiracy theory type stuff. But it's interesting. It's worth thinking about.
Yeah, I think I've heard you say that all famines are politically driven rather than sort of supply driven.
Yeah, well, that is actually, yeah. I mean, when I was at ANU, I did 2 degrees Asian studies and economics, and they did have like an overlap, which was actually studying how the big nations of Asia responded to Western imperialism. So the Japanese basically copied and then became empires themselves. The Indians sort of just accepted the Brits as like another layer in their caste structure. And the Chinese did the worst of all, which they basically rejected everything Western and didn't want to change any habits. And they basically had 100 years of disaster. But when Mao Zedong and the communists took over, one of the first things he said was, we're going to overtake the UK as steel producers, and we're also going to produce all this grain. And he set that as a political objective. And Mao had basically killed millions and millions of people during the war, was a war hero, whatever. And so everyone was trying to hit these objectives that he'd set. And actually what happened is they'd had a failed harvest in China. But because he'd set these objectives, they were actually exporting grain even as the sort of harvest was failing. And people were literally dying in the countryside, but no one wanted to tell Mao that his objectives weren't being hit. And then one day he went for a tour, saw that everyone was dying, basically skinny and dying, and they suddenly realized, and they changed it. And so you get this. So I wrote a number of papers on the Great Leap Forward and the famine that caused, and you go through different famines, and basically, if war is sort of like politics, but in essence, if you allow pricing to work, people reduce food consumption. What you tend to get is people eat less meat because meat actually takes up a lot of grain, and so you get adjustments. And so you shouldn't really have a famine that kills people in a free traded market, if that makes sense. The adjustments will happen naturally. That doesn't mean food prices don't still go up, but farmers and consumers should react normally to it. It's only when supply is restricted, regardless of price, that you get problems.
Yeah, it's interesting and almost identical to what happened to Ukraine in the 1930s. And, as you said there, it can be either a government limiting the trade. It could be, external governments like we've seen maybe with Russia at the moment. And, so I guess there's so many different things that could limit that free trade.
Absolutely. And I mean, that's the thing is like, I think, you look at Japanese militarism in the 1920s and 30s was driven by trying to secure food supply. And interestingly, the Japanese trying to secure food supply was driven by, they actually started to become big exporters to India. And India, up until that moment, had no tariffs on. And then as soon as they started to compete with British imports, because we like have a triple tariffs on, and you see um, how everyone's sort of making sort of reasonable self-interest decisions eventually leads to conflict at some point, which sort of seems to be where we are with China at the moment. And it's tricky because actually China is now becoming more and more reliant on outside resources. It's a big question. It's a big question, particularly for Australia. Really big question for Australia. I mean, how do we resolve that? And there are other bigger, longer term issues. I think Australia's already tried to pivot to become more reliant on India as a trade partner, which I think has its own issues. But yeah, it's just interesting to see how it all plays out.
Yeah, definitely. We've obviously saw with China trying to ban coal and some other things from Australia, and hasn't done too well. I think they've sort of realized, hang on, we can't just do a blanket sort of ban on these things. We are very reliant on it.
Well, that, I think was that's the whole premise of like the post World War II, at least post 70s onwards policy, is that if everyone trades with each other, we should be able to become more politically harmonious and get rid of wars.
Mm.
And now we're seeing with Russia and maybe with China the sort of limits of that policy. And yeah, it makes for very interesting times. It also makes it very difficult to invest, I think, a little bit. Yeah, it makes it a little bit tricky. I think, in my mind, anyway. But we'll see.
Yeah, definitely. And the way you sort of say that, China must be very reliant on wheat imports as well. So that, the current crisis at the moment in Ukraine, Russia, they're quite susceptible to the massive increase in price. And I guess you could say other commodities like fertilizer and, nickel and everything else that Russia has.
Yeah, I wouldn't worry so much about it's the Chinese are big wheat producers and they do
Okay.
import a bit. But wheat supply is quite diverse. So it's a much more balanced market.
Yeah.
It's things like corn and vegetable oil, crude palm oil, where supply is from relatively few countries and the import is into relatively few countries as well in size. So I worry less about things like wheat and also about rice. I also don't worry so much about. They would need something much bigger to happen to force those prices up a lot. Although, I hear rumors that they will go up a lot. And I was talking to a guy who works on a chicken farm the other day. I think what he was saying to me was that fertilizer prices, which have gone up a lot, because fertilizer does come from Russia and Belarus. He said, I think most of the farmers pre-buy their fertilizer. So the big price increases are going to come next year and then the year after. And that's going to really affect the price of meat significantly. So yeah, and I think when meat prices go up is when people feel troubled, if that makes sense.
Yeah, definitely. Because you mentioned how normally when there's high food inflation, we see high wage inflation as well, because that's, something that can't really, it's something that it's almost like a tax on people, isn't it? Because they have to pay it if they want to survive. So is that something that you're thinking will happen, especially in the Western world over the coming years?
Yeah, I do. I think you're going to see, I think when food prices are rising a lot as well, I think there's a general sort of a lot more political sympathy for people with relatively low income. And one of the interesting things when I'm sort of looking at food riots and is that they're often led by women who normally don't are not key political agitators, especially in riots. But I think that's driven by I can't feed my kids sort of thing. So what's going on here? And so yeah, I really sort of think if you start getting very big food price increases, especially for meat, and they're starting to happen. So I cook a lot of ribs, and I've got a butcher around the corner. And I was looking at for ages the price was always the same, and now it's just started to go up like. So I think it was like it's gone up £1. So going to buy the ribs now costs 20% more. It's not as bad as when I go to fill up the tank for petrol. That is expensive. So It's definitely there. It's just what is intriguing for me about markets so far is you're starting to see a political response a little bit, but you have yet to see anything from central banks, particularly. You know, we still have deeply negative interest rates, which is very, very surprising. And being a big surprise to me. I thought, they would look at what food and energy prices were doing and be much more responsive. In fact, the only sort of central bank that's been truly responsive, I think, is the Chinese one, where they've really cut liquidity and money supply down and allowed their currency to be pretty strong. That's been the only one that's really reacted to it, which then creates these other issues. If China is now is the price setter on food prices and they have a strong currency, that puts even more upward pressure on prices globally. So there's a lot of things going on at the moment, which is really interesting.
Yeah, and I think if you look at like who's very reliant on Russia and Ukraine, you could say wheat imports, exports. It's really North Africa and the Middle East, which is quite concerning because instability there could we saw in Syria it comes to Europe as well, which would then have further consequences, unfortunately, not just for obviously the people in those countries, but all throughout the world.
Yeah, absolutely. Yeah, it'll be interesting to see how they deal with it. But yeah, like I said, historically speaking, food prices spiking have led to financial crises. And the way I think about them is that the financial crises are actually governments trying to reduce demand to keep prices lower, and so they create recession. But you can see that the mentality has changed a bit, sort of going back to 60s, 70s, of rather than killing demand to get prices down, they're actually giving people more money, or doing subsidies or doing everything else. So protecting, it's a slightly different change, which is why I think inflation is starting to come back. The question then is, what do central banks do about that? And when do we get a reaction, if we get one?
Yeah. So do you think they're still going, because obviously the US has increased, they've started to increase and they're saying, up to 10 increases this year, which I find is quite unlikely. Do you see that happening in sort of most of the other Western countries? Or do you just think that, because from my perspective, probably the economies can't take it as well as the markets, there's going to be quite a lot of potential pain felt from these increase in interest rates. I don't know. What's your opinion on that?
Yeah, look, so the way I think about it is that, policymakers over the last sort of 10 years, what's the word? I think what happens is that policymakers do essentially what politicians want them to do, right? And politicians do what voters want them to do ultimately. So, and it's sort of all with a bit of a lag, but the way I'm sort of looking at it is like, so after the Great Depression, World War II, voters did not want to go through, declining wages, unemployment anymore. So government said, okay, this is what we're going to do. And they nationalized a bunch of industries. They made sure wages went up, people got employed. And then that sort of came to a natural end in the 60s, 70s in particular. It was like, you know what, we need to change this. We need to be more pro-business, less pro-labor. And through eventually sort of a lot of reforms, a lot of changes, unions got destroyed, private sectors, took bigger and bigger chunks of the market. And I'm thinking we're sort of coming to the natural end of that. If you look at some of like the consequences of policies like property prices in Australia, for example, don't seem to be reasonable, and the power that corporates have also seems unreasonable. The only thing that's missing from that type of analysis is we've yet to have like some sort of breakthrough politician saying, okay, we need to, if it's like Jeremy Corbyn had won the last general election in the UK, that would be a breakthrough for that type of change. What we've had is Boris Johnson won, but he's actually adopted a lot of Jeremy Corbyn's policies. But which is not quite what we're looking for. But it's what's interesting, if you look at China, where they don't do elections, they just are responsive to perceived problems, they've already moved down that route. And the question is if the rest of the world follows or not, which I find intriguing. And yeah, what will that do? If you look at what Chinese markets have done, or you look at what stocks like Alibaba have done, yes, the markets will be very weak, but I don't actually perceive unemployment having picked up in China, or even real wages falling. I don't perceive that. Of course, it's hard with COVID, but I don't perceive like the average Chinese person is suffering because the stock market has been weak. And what is interesting in the States is that Biden is very unpopular, even with a pretty strong stock market since he's been in power, but inflation is starting to hurt him. So I think the politics is changing. That makes for very interesting times.
Yeah, it's interesting. And you mentioned sort of after the, between the 30s and the 70s, obviously Bretton Woods, gold standard, currencies linked to commodities. And I guess after that, we saw obviously fiat currencies, but also an increase in globalization. So do you see sort of more of, many of these countries more looking inwards in terms of, re-onshoring a lot of their production and a lot of the work they do to benefit labor, potentially over capital, which is, we've almost seen the opposite. As you said, big business capital was the real beneficiaries of the last 40, 50 years. So do you see it almost turning on its head, going back to what we were like in the 70s?
Yeah, I think so. I think because if you look at what's happened with Russia, you no longer politically, you don't buy the cheapest producer anymore. It's where it's from is actually almost is more important than what the price is. And so that's a sort of strong 60s, 70s vibe, if that makes sense. And so, yeah, I think we are sort of going to that type of world. And certainly it's in line with, I think, the big issue, which is really difficult, I think, for people is that, what's the word I'm looking for here? Is that, yes, I realize, China is sort of like a communist dictatorship. Which makes it difficult to deal with. But on the flip side, I also think the US has a strong interest in maintaining its position as the largest economy in the world. And if you look at Trump, who is a very much America first type president, he was very anti-EU, because again, I think there's a sort of school of thought in the US that, wants to make sure there's no competitors to their power. And one of the things I find interesting is this issues with Russia is actually sort of awoken Germany as like a military power again, or that's what they're planning to do. And the idea of a unified EU, a properly unified EU, now seems on board. Which I think is interesting. I think, if when I look long term or think long term, the structure of the world seems to me of like an American bloc, a European bloc, China and India really seems the four powers to me. And that really Security Council, the UN Security Council really should be North America, Europe, China, India, perhaps Africa at some point would be a much more natural organization, but you just haven't had the political unity in Europe to make that work. And India has not been, for a long time, not powerful enough. But I think all those pieces are now in play. But that's a very long-term thing. I don't know how that affects markets exactly.
Yeah, I was going to say that's quite concerning to think that, because obviously the more powers, the more conflicts of interest, the more potential for further, conflicts, I guess.
I get that, but then that's why US policy is very problematic now, because after sort of the 70s, it was very simple. It's like everyone gets richer, right? Everyone trades, everyone gets richer. That's a really simple, powerful political message that everyone gets on board with. Now it's, US has to stay the richest and everyone else has to be poorer than us. Whereas actually the Chinese have their message anyway is a little bit more, maybe with the exception of Taiwan, we want everyone to trade with us and get richer. So the Chinese sort of have a slightly better one, but if they, Russia makes it all complicated. If they back Russia and Russia keeps doing what it's doing, then the Chinese message loses its power. So it's a real era. We're in the era of politics and change. Yeah, so it makes it very tricky for investing. I find very tricky.
So that's where you think the change we're going to see in the future is just more to these specific blocks rather than, I guess, a globalized world where everyone trades together.
Well, I don't know, because let's say Russia fails in Ukraine, you end up having a coup. Then Russia moves into a sort of pro-European orbit. Might happen, who knows? And then because you can see quite easily how Ukraine, and then if Ukraine can push Russia out, let's say, you can see how Ukraine and then all the sort of Kazakhstans, all the stands will suddenly move to a much more sort of different type of political environment. And then also, I mean, the thing is, like, China, the problem with China is everyone thinks they know what's going on in China, but even the Chinese don't know what's going on in China. So I'm like, there's assumption that has absolute power and will be in power forever. Where, if you look at history, change in that type of system can come suddenly. And actually, when I look at China, it's a lot. I don't know. China's difficult. No one really knows what's going on. And all we know is that it's definitely getting richer and definitely getting technologically improving all the time. And unlike a lot of countries, has had constant reform for 40 years, constant change, constant reform, new companies forming, always, and I would have said actually much better regulation of its big corporates than the West. So China is very difficult, very, very difficult at the moment.
It is definitely a different beast. So if we sort of link it back to what we were talking about, I guess, commodity increases, food price increases, normally, I think I read somewhere that you said normally this would be a perfect time to sort of short, food, because it's, it's almost demand destruction because of the high prices. But I think you said this time may be different. I don't know if you can explain why it could be different now.
Yeah. So, like I said, what was interesting is, like, so the original thesis was looking at Chinese pork prices, and they've gone up and then come down. And if you look at, you can get very good export data from the US on pork exports and where they've gone to. So US exports to China also went like this and now coming down like this. So I look at that and go, okay, the immediate catalyst and crisis for food prices spiking has dissipated. But then you do, like I said, there's another analysis of looking at grain, looking at food. And actually what's really interesting is that when pork became a bit scarce in China, people started to eat more beef. Okay. And beef is actually is less efficient than pork. Pork is a very efficient meat for converting grain to meat. But the Chinese suddenly developed a taste for beef. And so if you then go and look at beef, US beef exports to China, they've also gone up. And now China is like one of the biggest markets for beef for the US. And then you look at beef prices in China, and what you see is they are also still going higher. And so what I'm thinking, so if I wanted to make the bull case for you, what I would say is in the last few years, China has deliberately gone pro-labor versus capital. So that's why stocks like Alibaba, Baidu, all these ones have gotten destroyed. And so as they divert more income to labor, it also means that they don't devalue. So every time your currency devalues, you're really sort of sticking a pay cut through for all your workers, right? And actually helping corporates. That's why devaluation has always done that. So China's not devaluing. So it's creating more, it's not giving an easy ride to its corporates. It's basically saying, no, we're not going to make your labor force cheaper. You need to innovate and get better. I agree, again, a policy I agree with. And they seem to be achieving that. So you end up with this, and you can already see this, the average Chinese getting richer and richer. They're becoming the price setter for food. So food prices globally rise with Chinese wages, which are also rising, right? and then they're importing more and more grain and everything else. So you suddenly get this long bull market in food prices, and food prices going up, which then forces wages everywhere else up. And then because people don't like inflation, causes central banks to start raising rates. And so you end up with this very different environment where, and what you could say is a big catalyst for it is after the sort of Soviet Union collapsed and we integrated the East into the West, there was this huge labor arbitrage, which we fully utilized now. And now global labor rates are rising everywhere. And that means that food price and other things are going to rise. And so all the data from like the 70s onwards, which has been pretty deflationary, is about to become inflationary again. That's the bull case. As a story, it's not a bad story. At the moment, it's a story, and like I said, it's reliant on trying to understand what the Chinese actually want. And unfortunately, you can only guess at that rather than know for sure.
Yeah, and I think there's China also has a large amount of savings as well. I think, or I don't know if it's true, but like close to 30 trillion or something like that. So, not sure if it's that high, but I think.
Well, I think yeah. I mean, it's historically, like most of East Asia, it's a big sort of savings nation, but they do have a lot of debt on the other side. So, it's just that who has the money and who has the debt. So households have the money and the corporates have the debt. So that creates a slightly unusual structure, more like Korea than Japan, where in Japan, the households and the corporates have the cash. So it's a very slightly different structure in that perspective.
Yeah, it's interesting. So I guess, say if that bull case were to occur, if we link it to other markets in general, would you say it's almost going back to sort of what occurred in the 70s where, I guess high wage increases, probably very strong for commodities and I guess physical assets, but then equity may not have, performed as well. Yeah, I'm not sure if that could be the option. Yeah.
It could be. You have to remember, like that policy started in the sort of 50s, 60s. And that was actually a very good time for equities.
Okay.
It was a very good time for equities. It was good for it. It was like a very, really, really strong bull market. It's just that what is interesting about when I look back at it is what you had was food prices were rising for that whole period, but things like oil and gold prices were fixed. And so the big producers, particularly like in the Middle East and other stuff, were going, well, actually, we're selling all this oil, but it's buying less and less gold or less and less food because they're big importers of wheat, for example.
Yeah.
And you go, okay, well, we're not going to sell at these prices anymore. Yeah, and there was other things that drove that decision. But and what is interesting now is what you see is a lot of commodities like gold and oil have moved, but the food prices haven't moved yet, but they're beginning to move. So yeah, it's the analogy with the 50s, 60s, 70s is not perfect. There's problems with it, but it's a place where you can look for ideas to think about what could be happening.
Yeah, well, it's the classic that history doesn't repeat itself, but it rhymes sort of. So there are interrelated aspects about it.
Well, what is interesting, if you look at Chinese history in the early 70s, or actually late 60s, early 70s, was when China broke off relations with the Soviet Union and became more closely aligned with the US. And so what I like about that idea is that you got one country with 25% of the world's population, and actually where their politics goes, the rest of the world follows. I quite like that type of thinking. I find it often rejected by Americans as a rule, or even Europeans, because it's like so foreign to the way we're taught to think about the world. But China being unimportant on the global stage is a relatively short period from like 1800s through to 1940, 50 tops. Just because they're so badly managed as a country. I mean, even Japan, with 1/10 of the population, was beating them up, right? Coming in and saying, we're going to have this, we're going to have that. So China not being like a mover and shaker in the world was an aberration that lasts for about 100 years, but it was an aberration in the grander scheme of things.
Yeah, definitely. And then, so I guess traditionally during these periods, we'd see, I guess, the US dollar becoming quite strong. I'm not sure if you agree, people going to the US dollar, or so do you see something similar happening in the future, or do you think there's almost going to be like a shift in what occurs?
What is intriguing for me, I think the dollar is strong, but the reasons for it being stronger, I think more. So I'm just going to look at because the thing that people also never talk about is the renminbi is also being strong.
Yeah.
Right. So which one's driving which? And whenever you say a currency strong against what, right? And it's been strong against the euro and the yen. But what's been and for me mind blowing about both the Europe and Japan is if you look at like energy prices in Europe and Japan, LNG prices, for example, they all skyrocketed last year, well before Russia invaded Ukraine, and the central banks in both countries still run negative interest rates, right? That was for me a big surprise, and so one of the reasons I stepped back is like, we know what a lot of the way I think about currencies and commodities are driven by understanding how central banks react to things. And you got these central banks looking at like a tripling in energy prices and saying, this is not a problem, don't worry about it. It's like, well, that is really odd. That's really odd behavior. There should be some sort of reaction to that. And it hasn't. So that's sort of why I've been sort of step back and have a think about things and try and understand how the world works, and talk to people like on this podcast or on my newsletter. It's just me trying to work out what's going on. I think I'm getting closer to an answer, and then I have to face the question, well, once I've worked out how the world works again, what do I do with that? That's but that's one step at a time, I guess.
Yeah, definitely. Because I think you said that you learned your trade during like the 2000s, and then during the 2010s, it completely changed how the markets and how, I guess, economies work. Do you see it, I guess, going back to the 2000s or?
Well, actually, weirdly enough, I really got learned about the world in the late 90s during the Asian financial crisis. And 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 then we had the dot-com bust, which also came along, which was sort of very informative in my thinking, and probably bad in a way because it made me always think there's always a bear market every 5 to 6 years. And here we are, 13 years into a US bull market.
Yeah.
So I feel very, very foolish about that. It was just a misunderstanding of how the world works, I guess, which I'm now trying to correct and get more into line. But I think that's it's being driven by political change, and that political change, I think, is being driven by China emerging as a competitive threat to the US. And so it's like a three-dimensional chess game at the moment.
Yes, as you said, you need to spend time actually looking into it and understanding it. And I think that sometimes it's so easy just to think of an idea and you say, oh, that sounds good, I'm going to go into it. But would you say that's is that how you look at investments? And I guess putting it on, that you have to spend lots of time actually understanding it and researching and getting an understanding.
Well, it was just because of like the big crises and bear markets I'd seen earlier on. Whenever I did anything investing wise, I would always have a reason why I would do it, and then a reason that I would take it off. And that really worked well for me for a long time. And so that would be how I acted. And what's happened is all the things that used to signal good reasons for taking stuff off don't work anymore, right? Like, and all those signals don't work anymore. And so what you've seen is the real winners have been the guys, or the investors, who are just always long and long quality US stocks, right? Not the guys who are long emerging markets, and not particularly the guys long Europe. Some of them, of course, but it's been the guys or the investors or funds who are set up in a structure where they're always long have done very, 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 very well. And the sort of subset, which I guess are called sort of macro investors, into where I sort of fit, have really, really struggled. And none of them really have very good answers for why markets have traded the way they have. But like I said, I think I've had like my eureka moment this weekend. So I'm going to put in my newsletter. I still got to get all the data together, so I can't really talk about it yet. But I think I'm getting somewhere.
Yeah, definitely. So got to keep up to date with the newsletter to find out more, I guess.
Yes, please.
Yeah, definitely. So I guess one more question. You mentioned how you had these warnings that, potentially like, oh, okay, I should, maybe change my position or take it off. Can you maybe give an example of what they were?
So in the olden days, as my 11-year-old calls anything that's pre 2015. So what you used to see was like sovereign bond yields, so like JGBs or treasuries would start to rally, right? And you also often see yen strength, for example. And what I always used to take as a very bad sign was like the share prices of banks would start to go sideways to south. And these are, and then you'd see, for me, other sort of strange currency moves. So I always found, historically speaking, weakening Asian currencies a very bad sign. So it's always a sign of slowing growth, impending credit problems. And those are all very good signals that worked for a very long time, but haven't worked so much over the last 3-4 years. And then I used to do a lot of work on a relatively new macro data point called net international investment positions. So over the last sort of 10 years, every country has sort of released that. And so I used to look through that data, and typically when a country got to a very negative net international investment position, you wanted to be super cautious on its assets. And when I back tested it, it worked very well with Japan, worked well with Asia, where it worked well in the Euro crisis. So then I applied it to countries like Brazil, Australia, Canada, Mexico. These places worked fantastically well. And that model, again, basically has said you want to be bearish either US dollars or US equities since around 2016, 17. So again, that model completely failed. And, so it's like, real head scratcher. So you have all these things that used to work quite well. And also, to be the other thing that's very difficult to understand about this market, if you go back to like the dot-com bubble, or even pre-GFC, normally when you have strong stock markets and growth, the government is actually improving its fiscal position, right? That was like quid pro quo. Okay, we have a property bubble, government saves some money to spend in the down cycle. That also doesn't happen. It's just spend. So it's a very different world that way. And what is also unusual is if a sort of time traveler from the 80s came and he said, this is what's happening, right? They'd be like, well, gold must be $50,000 by now, right? It's about 2,000, goes up and down, doesn't do much. And so you've got all these things that used to, these way that the world used to work, not working the same way. And I've been thinking about why that would be the case. And what's been interesting for me is that, and this is basically what the next sort of newsletter is going to say, is that I thought one of the reasons why the world wasn't working the same way is we had this very long bear market in commodities. And so when commodity prices are low, nothing changes. But now commodity prices have been very strong for the last year or so, and nothing really has changed again. And I think actually that gives us a clue to what is really going on. And that's what I'm going to write about.
Yeah, perfect. I can't wait to read it. I'm sure it'll be very interesting. So yeah, I'll definitely put all the links down below to your newsletter and your Twitter as well. But Russell, thanks again for your time. And I guess just on to my last question. If someone were to take one message away from our interview, what do you think that should be?
What I would say is, you need to try and think for yourself as much as possible. I think, what you find, and this is a recurring feature in markets, is people understand one market, but then the world changes again. And so it's not always simple. But what I would definitely say is, like, if you find a really great company that's doing something really great, just that those are always the best companies. My best investment ever was Little Creatures, the beer company.
Okay.
It was a list. I went to Perth. When they first started, my
This
friend
is an
took me to
Australian tip.
yeah. Well, they're being bought, but
Yeah.
bought by Lion Nathan. But he took me out to their brewery in Fremantle. I thought this beer is fantastic, and then I saw they were listing, and I was, well, I'm going to put. Unfortunately, I didn't have much money back then. I think I put $1,000 in, put $1,000 worth of shares, and they went up 4 or 5 times and got bought, and paid a big dividend on the way. And that was, I was like, and that's always sort of stuck with me. And then if you talk to any sort of fund manager who's been around, or investor who's been around for a long time, it's those are the companies where you make most of your money. That is generally how it works. So you just find a really good company doing something really well, and that's normally the best way to do it. The only thing I would say, though, is that we are in a time, for me, like, I could see gas price shortages. Just to give you another lesson, I could see gas prices going up, oil price going up, and so I would have been quite upbeat on Russian stocks, which would have lost you, which are donuts basically.
Yeah.
So sometimes it's not quite that simple. You needed to pay attention to what's happening politically, but that's just. I guess I would take those two lessons.
Yeah, that's interesting. I guess, just one more point. Traditionally, most people, like you could say, like a Warren Buffett, they're like, oh, don't worry about these geopolitical risks. They'll resolve themselves. But now we've seen, with China the past few years, and obviously Russia, it may not. It may be that these geopolitical risks are really important to know.
Exactly. And like I said, nothing's ever stable. There's always, you need to just keep thinking, and you know, and always remember there's a survivor bias in finance.
Yeah.
So the guys who've done very well have been the ones that have been in the right place, and doesn't mean they'll be correct going forward.
Yeah, perfect, Russell. So thanks again for your time. And I've mentioned the newsletter, and you said you're going to release the amazing new article that sort of explains what you think. We'll see. And obviously you're on Twitter as well. Is there anything else that people should be aware of, or no?
Yeah.
All right, awesome. Thanks again.
Great, my pleasure. Take care.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.